Welcome to Trading Lounge and the gold silver report for Friday the 25th of June. So I don't have any very clear answers for anybody, but we can just go over what we know and what we can expect and so on. So on the monthly chart here, if we look at this here as wave 1 and 2 here, and then nice long third wave up here and the fourth wave here. Well, the fourth wave here, if we take the worst case scenario and look at roughly wave 2 low to wave 3 top here, then we can see that the 38.2% retracement level here is right on this low of wave 4 here. Now that's the 40%. So sometimes we see after a strong move here, we can see a retracement level come sort of below that, but that's our sort of starting point at that point. So we can see in a nutshell that we've had this long third wave here. So we're definitely in some wave 4 pattern here, and we've pulled back to the 38.2% retracement level. So once that is completed, then we can expect a move to the upside. Well, yes, we know that, Pete. So we also know too that wave 4s can get complicated, so we need to be mindful of this market extending sideways further. So we're going to be looking at that today. But the positive news is that it is corrective, and we will be going higher at some point. Now, at what point? Well, I've looked at some of the fundamentals about gold, and we know that China overtook India as the biggest gold consumers, and those consumers are coming from just normal housewives, households rather, because in India and China, as far as my understanding, and obviously people can comment on this, but they see, you know, the public in those two countries see gold as a store of wealth, and they buy it more so than what we do in the West here. So India's been under pressure with the COVID, unfortunately. So there's apparently, listening to some expert on that in that area, he's saying that there's a lot of pent up buying to be coming into the market, a lot of demand coming into the market from, you know, half the way through this year to the end of the year. So he as a fundamental person sees a lot of demand coming in the second half of the year for gold, right? So we know that it's there. We know that it's there fundamentally, and we know that it's there technically. Now, the problem is like exactly when is that going to occur, and what patterns are we in? We're not in a simple wave 2. We're in a wave 4 that can be sort of complex. So we need to understand that. But we also know too that the market has pulled back to where it should have pulled back. So let's just work our way in through here. Let's just go to the weekly chart here. We've got this nice trend line through here. It hits the 40% retracement level that we're looking for. This is my original count here. I haven't adjusted this at all. So we were looking for wave 1 and 2 and 3 and 4 and 5. So that could still be the case. I need to adjust this further up here for a wave 1 and 2. Now that could be as simple as that. And we can move, continue to find this low here of wave 1 and wave 2 here, and then move up into the third wave. That could be okay at that point. So that's sort of looking good, in terms of the natural sort of flow and Elliott count and so on. Pulled up to the 61.8%. There's a good case of looking for 5 waves in this move up through here. Yeah, so we'll just go in further and check on this. So let me think. Well, there's a couple of things we can do here. We can look at just sort of moving in on it further. So there's this particular pattern that we could use here, which is a triangle pattern, and this would sort of be sort of time consuming in a sense, you know, having this as an A and a B and a C and a D and an E wave here, and then heading up higher above. Would expect it to move up into from 2000 to 1, 2, and 3 into group 1 above the major level 2 here. That's where they normally top out. When a market's looking like this, they'll, you know, make a new high above here and top out somewhere within group 1 here, somewhere in here, but we'd be looking for 5 waves in that move. So I don't know if we've got this situation going on here, or do we have something a little bit more simple, like I mentioned before, where we have wave 4 here, and we have wave 1 up here, and an A and a B and a C. We'll talk about this whole leg here in a bit of detail shortly, but wave 2 sitting here. Or do we look at, because this was so sharp moving down here, do we just look at that as the A wave coming down, and then a B wave going back up, and a C wave coming down again for wave 2, and then moving up at that point? Or can we just move straight up from this point? Obviously, once we find this low in here and we start to see an impulse wave to the upside, we will certainly be looking at trade setups and looking to move into that. But we'll also be aware of this situation, and this situation here can also sort of tie into the triangle pattern that we just looked at as well, because the B wave would pull back up roughly where that triangle pattern was working, with an A wave, B, C, D, and E wave here for that. Okay. Yeah, so that's kind of it in the bigger picture. Now, this move up to the 61.8% here has moved back down to the 61.8% here as well. I don't think that we're actually finished. I think there's another little low to come in. And just to clear out these people buying the dip here. As I mentioned last time, if we got a support on the closest largest number, which would be this minor level 18 there, then we could start to look at building the long trades from that point. If this consolidation proved valid and we moved up, I think we're going to move up. We can move up here anyway, but we'd need a classic trading levels pattern sitting on that 1800. So this is the classic trading levels pattern. So if this is the 1800 here, we would have the arrival, the reaction, the first high above the level, the ABC pattern. So we're looking for that reference point high here. That's what we need, because once we got that, then we can look to go long above that, and then long above this high here, and we can refine it down to here. The other interesting thing about this too is that if this is a little fourth wave going up here, then the 1800 is the 38.2% retracement level for that. So the market finding support on top of that 1800 would negate that wave 4, and then we would be looking at an impulse wave, and we could look to the upside at that point. So it's a matter of understanding what counts we've got in the bigger picture, and then breaking them down until we get to a point where we can start eliminating certain counts, and we can look for setups in that range. Now, I'm just going to go straight to the tick chart, because I've just spent some time going through all of this again, and we'll just run through that. So we'll go 100 ticks, and I'll bring in as much data as I can. So just to look at this in a slightly different way here, it just counts a little bit better. So this is the low here, and this is the low that we've worked with GDX and GDL. Now, I'm not totally familiar with those markets, but I do find it quite interesting here, and I think I should sort of point it out a little bit. Yeah, that's okay. So this is just a daily charting program. So with the GDX here, I don't know why people trade GDX because with US spot gold, we've taken out this top here. So GDX is only moved up sort of halfway or whatever here. But when we look at GDL, that's moved up and taken the high out of here. So the GDL is a much bigger market, of course. So yeah, it's certainly accommodated a decent range within that space. So I just wanted to point that out. GDX here is almost like Barrick Gold ABX, I think it is, you know, in that sort of pattern, in that thing. So very sort of sluggish. So I don't know the reasons behind that. I know this is a smaller market, but I don't know the machinations of that. But sorry, what I wanted to also point out here too is that coming back over here, we can see with this market here, this is GDX here, we've got a very clear wave 1 and 2 at this point. So that's the reason that I've also looked at moving this out of the way, using this as the same date line here as, you know, from the March lows, the equinox here, so wave 1 and 2 here, and basing it off GDX and also GDL2 to a point, a little bit sort of scruffy here on the March lows, but building in that in that regard. So that said, I can just remove that. So I've counted as 1 and 2 here, and then 1 and 2 and 3 and 4 here, and then a bit of an extension here with 1 and 2 and 3 and 4 and 5 here for the 5th of the 3rd here, and then the 4th here and the 5th here. So if somebody's got issues with that count, please let me know, because I think as a group of people, it's nice to be able to work together and solve some of these problems. So yeah, if you counted it from this point here, you would probably need to count this as 1 and 2 and 3 and 4 as an extension in the 5th wave. But I've sort of worked through this in a bit of detail on this tick chart here, you know, to the point of understanding each little structure within in here for all of this. So wave 3 here with an A and a B and a C to wave 4 here, then 1 and 2 here, and 3 and 4 and 5 waves up here. So each of, you know, I've accounted for each wave, put it that way. So one of the things I struggle with here a little bit with the US spot gold, just out of sort of interest, is that you know, if we're looking for an ABC for a wave 2 here, then wave 2 is normally a zigzag, so would have 5 waves for wave A, and then we would have 3 waves for wave B, and then we would have 5 waves for wave C here. So it's an ABC, it's a zigzag, it's a 5-3-5 structure. So when I count it here for this, I've struggled to count 5 waves in the A wave here. So just going over that a little bit, just to shoot the breeze on this, because it's nice to know where I'm possibly wrong as well. So with this here, I'm looking at this, I'll open this up a little bit further. So it's kind of easy to see that we could look at all of this as wave 1 here, as 1, 2, 3, 4 and 5 here for wave 1 and 2, and the 3rd wave here with 1 and 2 and 3 and 4 and 5 here. This is an ABC pattern here, and then we'll call this a truncated 5th wave with 1, 2, 3, 4 and 5 here. And I kind of like that. That's okay for me, because what it does, it leaves this clear here to be 3 waves here. So we go 1, 2, 3, 4, 5 here for 1, and ABC for 2 there. And then we can come into this next section here where it's pretty obvious here this is 1 and 2 and 3 and 4 and 5 down here. So really I'm just left with 3 waves here in the A wave, when if we were looking at a wave 2 as a zigzag, or just as I just mentioned, we should be looking at 5 waves within this structure. But I'm not getting that, so that's a bit of a problem at this point. In this case here, we can look 1, 2, 3, 4, 5 for the A wave, scruffy enough for a B wave. This also gives me a problem here as well, because this move here is only in 3 waves here. So really I should be putting this one over here, but you can't do that. So, but that's only giving me 3 waves in this move here as well. So do we actually consider this as wave 1 here and 2 here and 3 here and 4 here and 5 here for this, and bring this over here to get our 5 waves, and then the ABC pattern here? I mean, what occurred here, as I just mentioned here with this truncated fifth wave and so on, is that a reflection of this over here? Is that a repeating pattern over here with that? So anyway, that's just one of the issues that I have with this particular pattern at this point. The rest of it flows quite nicely through here. I don't need to pull that apart. You can see each little tiny, you can see that's all part of the same family there, and then it jumps out of that into its corrective pattern. So we've got from wave B here, we're going down for wave C. So wave C should have from wave B down to wave C here, if I can squash this up here, we should have 5 waves in that from this point to this point. Okay, so it's pretty obvious this is wave 1 and 2 here, and it'll be pretty obvious that this big drop here is wave 3, typical wave 3 stuff. And within that, I've got wave 1 here and wave 2 here, and then green wave 3, green wave 4 here, and green wave 5 here. So all of those, we can expand that and have a bit of a look at that, and that all fits in quite nicely. I've gone through it, all fits quite nicely with wave 1 and 2 in here, and 3 and 4, and then extending down into 5 here with 1 and 2 and 3 and 4 and 5 here for the 5th of the 3rd wave, an A and a B and a C for the 4th wave here, and then down for the 5th wave in 5 waves. So that all sort of suits quite nicely for wave 3 there. So that brings us over into wave 4 here. Okay, so we've got overlapping wave structures here. So I was looking at this as little 5 waves up here for wave 1, 2, 3, 4, 5 for the A wave, the B wave here, and then the C wave at this point with 5 waves in it. And then 3 waves for the B wave here, and then it's a bit rough and ready, but all the way up here for the C wave to make blue wave 4 here. Now we know that wave 4s can be complicated, and they're normally complicated more so after a very big emotional event here, because anything that happens in your life that's big and emotional, it takes time to recover, and that's really what wave 4s are in a way. So also the other point I need to make too, so from the blue wave 2 up here, blue wave 2, we'll just grab that here, somewhere near enough will be good enough, as they say in Australia. So from wave 2 to wave 3 here, you can see that this is 38.2% retracement level at the 1800. Well, just a tad above it. We haven't actually arrived there just yet. And I wonder if this can all be a bit more complicated. I wonder if this here can be an A wave, a B wave, and a C wave here just to make the A wave here. So I'll copy that and put the A wave on top there, and then a 50-60% retracement level for wave B here, and then looking at this as wave C here for this of wave 4. And then we come down for wave 5. That will bring us down anywhere from 1750, 1730. It may even drop a little bit further. I don't know. But all we can do in this instance here is track the 5 waves that it plays out with down here in this regard, you know, whatever that is. But we'll be able to peg the bottom, because impulse waves are much easier to figure out than corrective waves. Corrective waves are really just moving through time and space sideways, and they can double and triple on themselves and all those sorts of things. So if that blue wave 4 here that I've got is correct, we'll just work on that for a moment. If that is correct, this first one here, then we'll look at this down for 1 and back for 2 here, and then you can see that we've got 5 waves down here. I don't need to count it, but so it would be down for 1, back for 2, down for 1, and then this area here would be the 50-60% retracement level, and that's where it would drop from that point. So if you see this market move up and it's past this little box here, then expect it to go up to the 1800 here. But also don't expect it to be part of the bull market. It's still part of the corrective market. If, however, we make some sort of thing, because maybe we could count this up for I don't know, it's just hard to get an impulse. Maybe you could go wave 1 here with an A and a B and a C wave here, or something crazy, and up for 1 and back for 2, but that's in 5 waves, so that doesn't figure out. But what I was just trying to say is that if we got a classic trading levels pattern sitting on the 18 here, it was very clear. So we had the arrival here, the reaction, the first high above the level that was nice and clean and clear, and something like that. Well, then, yeah, sure, we will look at going long at that point, because that would be above the 38.2% retracement level, and it would be a clear breach of anything else. But it's a bit hard to go there just yet when this looks so corrective. But I just would need to be open to both sides. So we would need to see a trade set up on the 1800, as I said earlier this week, and we just haven't got that just yet. So I think, in a nutshell, I think this is sort of where we are. I think we have another leg to come down here. Now, this could be the low of wave 2 at this particular point in time down here. Or, as I mentioned before, if I go back to our daily chart here for a moment. So coming back here, it kind of makes a little bit more sense. So we've just gone through all of this here. So we could have this low in place down here for this. And or all of that's just going to be the A wave to this point. We have a B wave and a C wave. So that could also play out as well. But I've gone back and had a look at the history of gold, and it normally seems that we just get that sharp drop and then we mosey on off from that point. So same old story from the beginning of the middle of the week, or during the beginning of the week. We need that support on the 1800. If we're going to go long from this point. Otherwise, we're going to pick it up further down from the 1750 to 1730 sort of area. That's my take, and that's about it. So thanks for tuning in. Appreciate the support, and enjoy the weekend. Cheers.